What's up guys, it's Sam here. Today we're just going to go through a video that's understanding how Wall Street is actually manipulating your money. How they are using these free zero commission brokers to actually manipulate your order flow and turn it into profit for them. So it's all a game, and basically they are the guys that can see the cards at all times. So remember, this is not financial advice by any means, and remember, do all your own research and due diligence whenever looking into anything that we do say on here. Remember to hit the like button, hit the subscribe button, as it really helps us out an awful lot. We're really gaining traction, and we're going to get up to over 250 very soon. So thanks guys, and look, we'll get straight into the video where we're going to understand how Wall Street is actually manipulating your money. So guys, over the last year, you may have seen a lot of these brokers offering pretty much no fees to low cost fees to pretty much just get you in the door and in trading. So a couple of years ago, this was not the case. Like, you would have had to spend like 5, 10, 15 euros, pounds, dollars a share. Not a share, a transaction. So these guys have started to get you in. You have the likes of Trading 212 that's here that we use. And basically, there's actually a link to a beginner's guide. I'm going to link in the top left, just on the beginner's guide on Trading 212. And then also you kind of have the other ones. You have eToro. So eToro is just like another one. You can actually do a lot of copy people's trades. A lot of that kind of stuff has a good lot more features than Trading 212. But Trading 212 I find is the most simplest to use. You also have Degiro, which I actually have this on the page of where they discuss their fees. So Degiro fees are actually quite clear. You can see them. They, compared to 212 or eToro, they are higher. But if you look compared to Davy, Stockbrokers, Goodbuddy, Cantor Fitzgerald, they all have a lot more fees than what Degiro has. So, but the one issue I have with Degiro, they don't have fractional shares. So fractional shares is a bit of a problem for Degiro. But then also you have the most famous one that has come up, which is Robinhood. So Robinhood is the biggest one in the US by some margin. And we're going to get into just how much these companies have been growing by. And it's just absolutely crazy. Absolutely crazy. And we're going to be understanding where these guys like Robinhood, Trading 212, eToro, Degiro, where are they making their money from? Because you can't just have a service that's free of charge. So you have to think about this. When a service is free, you are the product. Same as like Facebook, Instagram, all them kind of things. It's free because you are the product that they are offering. So the same applies here. So just think about that. So this is the growth of two brokers I just selected. Trading 212 that covers like the UK, Ireland and Europe, and also Robinhood that's in the US. So you can look at Trading 212, 400k to 1.4 million in just 12 months. Assets under management, 50 million to 2.7 billion. 15k stock trades per day to 1.5 million on average, which is 9,900% growth. Daily active users, 28k to 600k, which is 2,000% growth, and 30k record funded accounts per day. So the growth on this is absolutely insane. Like, it's absolutely phenomenal growth. They even had to shut down taking on people because they could not handle the amount of people that were signing up. And also then in Robinhood in the US, at the beginning of 2020, 4.3 million users compared to 17.7 million users to the first quarter of 2021, which is absolutely crazy growth. So how these guys make money is payment for order flow. You've probably heard this if you're into stocks or understanding what it is. You've probably heard of the phrase payment for order flow. So basically, the broker sells the order that you do on their platform to a market maker that will then process the transaction to allow you to have the share. Legally, they're supposed to give you the best possible share at the time to give you the best price. But this doesn't always happen. So basically, companies are paying to process your transactions, and they're not necessarily giving you the same price, and they are scalping off the top of it. So that's how these like hedge funds and institutions are actually making money from payment for order flow. So the third parties that are involved in this are the market makers, exchanges, wholesalers, and institutions. So these guys are all involved in manipulating the market through payment for order flow. So Robinhood gets nearly over 80% of their revenue from order flow. As you can see here, Robinhood makes a crazy amount of money from payment for order flow. 331 million in the first quarter, which is absolutely crazy amount of money. And you can see the Robinhood's money making machine here. From average account value is only 2.2k. The order routing revenue is 90.9 million, and the order routing revenue per person is 40k, which is so much more than the rest that they are competing against. So you can see in the Wall Street Journal article the amount of companies that are actually paying for Robinhood's order flow. The majority is coming from Citadel Securities, which is one of the companies that was involved in the Gamestop and AMC frenzy back in January, February time. So they are all involved together to try and manipulate how the market reacts. But look, we're going to get into just a little bit about what the GameStop saga was all about. So the GameStop saga was one of the most popular things that happened in early January and February time, which is one of the biggest things that happened this year. So people identified that GameStop stock was way over shorted, which resulted in like one of the biggest and most community driven short squeezes in history. So basically, these institutions that were involved in shorting the stock lost an awful lot of money. People were actually freezing the trades. They were stopping people from acting to buy more. You could only sell. Everything was going on. A lot of people got hurt from the short seller side, and a lot of people made life-changing amounts of money. So this is what's also driven a lot more people to get involved in stocks. They're seeing this, they're seeing a lot of people making a lot of money, and now they want to get involved in this kind of stuff. But it's possibly to make note that this stuff doesn't happen all the time, and a lot of people were there buying GameStop stock at like the top of where it was going, believing it would go even further, and them guys are left holding the bag. But the real guys that were holding the bag are the institutions, and they lost in this attempt to try and manipulate the market. So what this has resulted in is that people are paying the likes of Robinhood to route a lot of their information through them, which gives them the power to have the order flow, which is quite a conflict of interest when you're supposed to give the people that use your platform the best possible prices. But this ends up happening that they actually sell at suboptimal levels, which is a massive conflict of interest. And this practice is actually banned here in the UK and other parts of Europe as well. So this is actually a well-known practice that was done by this man that you will all know as one of the biggest scandals of all time. And of course, I am talking about Bernie Madoff. He is behind one of the biggest scandals in all of Wall Street, where he created one of the world's biggest Ponzi schemes, and how he did that was by paying for order flow. Back to more recent times, and Robinhood are actually getting in trouble for their use of the order flow payment system, that they have been giving these institutions priority, and they've been selling their customers suboptimal shares and losing their customers actually money. So it was reported that Robinhood actually lost their customers $34 million by doing this practice, and that hit them with a fine of $65 million just in the last few weeks, which is absolutely crazy amount of money. They pretty much got fined half of the money that they so-called made from selling the order flow. So why pay for order flow? Why would you do it? What motivates these people to buy order flow from brokerages and exchanges? And that is, as you can see here, the buyer buys from the market at 99.75. The national offer is 100. There's a spread of a difference, and they basically scalp the entire market, making these cents on every single trade, but they add up to millions and millions and millions of dollars. It's a crazy practice, and it's just scalping the markets in real terms. But also, the main thing is that they are selling your information. They are selling your information to the institutions, the hedge funds, the banks. They know exactly what is going on, what orders are placed, and how to react against it. That's why they had this thing with Gamestop. They started blocking orders because their clients are the likes of Citadel and these other kind of hedge funds, and basically that is what has happened. They are manipulating the market as well as scalping off the top of it, which is just not a good practice to have. So more regulation is incoming to try and stop this, make things a bit clearer, see what's going on, see how much money is going for payment for order flow. They're trying to regulate it an awful lot more. But the hands down facts and truth is that basically the facts is that they are manipulating the market by having your information, and they can act appropriately to counteract whatever you are trying to do. In most cases this works, like apart from rare events like the event we saw with GameStop and AMC. Unfortunately, there's nothing we can really do about this apart from they bringing in tighter regulations. And now I'm just going to get to kind of my final thoughts on this whole Wall Street situation. And I feel this is why crypto has become so popular over the last while, as it's just decentralized information. There's no one manipulating the market to the extent where you're selling actually your information. It's like having a game of poker, and they can already see your cards before you even play them. It's just not fair, and that doesn't really happen as much in the crypto market, so people are appealed by that. I do think more stringent regulation needs to be brought in, but we also need to be aware of the stuff that is going on in the background. And I know this is a pretty boring video, but it's just understanding of how Wall Street actually manipulates the market by paying for your information and actually scalping off the top. Look, if you made it this far, that's absolutely fantastic. I don't expect many of you will have, but thanks for the support, guys. And remember to hit that like button, hit the subscribe button, and we will see you in the next one. Thank you.